Not all types of credit are created equal. They have different uses, different interest rates or loan constants, they have varying benefits, and may not really be serving your higher purpose. There's 3 main types of credit that you should know about, and a couple others that do get mixed in with those main 3. There's been a lot of miseducation, and in a lot of instances, no education in credit, how to build it, how to use it, how to restore it and remaster it, and ultimately use it to leverage to create new streams of income and generational wealth. This has left millions of Americans with no foundation on how to create credit and how to use it to your benefit so your family can grow. This has left millions of Americans at a severe disadvantage to creating generational wealth. I'm Lauren Dolgero, aka the Solutionist of Total Solution Trust. I help people to restore and remaster their credit so they can make those needed big ticket purchases to grow. I am frequently asked, what is credit? Well, there's 2 ways we can look at credit. Credit, first of all, when we're talking about credit to use, is more than literally other people's money. Whether it's the bank or a private lender, whoever you're using the money from, the company on the card, that is other people's money. Credit is also used when we're talking about your buyer's profile in terms of the creditor's world. In American society, we've kind of been bred and groomed to use credit to buy consumable goods, including liabilities like your home, a car, personal loans, school, education, college loans. We've been conditioned to use credit for liabilities. Our educational system here in America does not include the study of credit, the types of credit, how to create, rebuild, remaster, and leverage your credit profile for investment purposes. So we've all been really left at a disadvantage. It's become my mission to help through that educational portion to teach people how to restore their credit. We want you to understand how to build, remaster, and to leverage your credit. Learning how to use credit intelligently is paramount to avoiding the common pitfall, overusing your credit or using it for the wrong purposes. The first type of credit is revolving credit. We think of revolving credit typically when it comes to our store credit cards, our Visa cards. These are unsecured because you don't have to put down collateral to get that credit limit. You can hold balance with a credit card. It's not advised because you will obviously incur those interest charges based on the balance, the daily balance. Now, it's important to make note here, often included in the revolving category are charge cards. But charge cards are different from credit cards. Here's how. Credit cards, you can keep a balance without paying it off every single month. Granted, yes, you incur interest from your daily balance, but charge cards are different in whatever funds you use for that month, you have to pay off at the end of the month. Otherwise, you will incur obviously interest, but also penalty fees. And as intelligent users of credit, we don't want to pay any additional interest or penalty fees. The next type of credit is installment credit. These are typically your home loans or your personal loans or student loans. With installment credit, you have a payment that you can count on. Your APR is automatically calculated into the payment, and you know that you'll be paying these payments for a certain number of months, unless you make extra payments that would change your total payoff term. This is a different type of credit in that it is collateralized, whether it's collateralized through the home or the property or the vehicle. Collateralization simply means that the bank has a way to make themselves whole if you're unable to make whole on your repayment terms. Now, the next type of credit is one of my favorite. Lines of credit. This is my favorite type of credit because it's reusable. It saves me on time, effort, and it helps to save the environment with all of those applications. Lines of credit you can reuse over and over and over as long as you're paying off the balance. to fund projects now and into the future. Where installment credit is different, it's one and it's done. Once you make that final payment, you're not able to reuse those funds again. You need to go fill out another application to get more funding. So line of credit is different, it's reusable, it saves time in applications. Now, one type of credit that we typically don't think of is non-installment or service credit. This is the kind of credit that utility companies will use to determine whether or not we have a deposit to make or how big our deposit is, and also the timeline in which that is going to be refunded. So non-installment or service credit is what your utility company is using to determine whether or not you have that deposit to make. If you have poor credit, chances are you have a deposit, and the worse your credit is, chances are the higher the deposit is. So one benefit of having outstanding credit is you don't have to worry about these deposits for your utilities. You can call and just make the connection. And I hope you enjoyed this short video on the types of credit. Please like, subscribe, and share this video and all videos. Total Solution Trust, we love to have you with us. You're not going to want to miss out on the information we have coming about how to restore your credit masterfully. And you'll also uncover how to turn that credit into monthly income. Again, I'm Lauren Delgaro, aka The Solutionist with Total Solution Trust. I'm here to help you remaster your credit so that you can achieve your desires.